Alright y'all, have you been searching for a Binance Futures tutorial video? Are you looking for somebody to take you by the hand and walk you through the wonderful intricacies of USDM futures contracts, CoinM futures contracts, how to manage an open trade, set up take profits without closing your whole position, taking partial profits out, setting up a stop loss, how to open up a futures account, how to fund the account, how to link your Binance account to 3 commas so that even if you live in an area that might not be friendly to trading Binance futures, you can still do it through API. Well, my friend, you have come to the right video, because today, on this beautiful, sunny Friday afternoon, I am going to take you by the hand and walk you through step by step how to open up a Binance futures account, how to fund that account, how to enter a trade long, how to enter a trade short, how to take partial profits. We're going to go over margin, we're going to go over leverage, we're going to go over different order types, how to take partial profit, all that, stop losses. Anyway, before I continue, I would not be a responsible, stereotypical YouTuber if I didn't say that if you like this type of content, where we go over different types of exchange tutorials, where we focus on teaching technical analysis, showing you how to become a confident, profitable trader so that you can do this as an extra income, as your main income, so that you can gain self-sufficiency, autonomy, so that regardless of who you are or where you are in the world, as long as you have a laptop and an internet connection, you have a means of creating income for yourself. Go ahead and like this video. Go ahead, subscribe to this channel. Go ahead and share this video on all your social media networks. I'm talking about Bookface. I'm talking about Instagram. I'm talking about Twitter and TikTok, all the other breath mints, extra gum, all that, because I do believe that this video does contain some good info. I hope you find it helpful. With that being said, let us get into the video. So the first thing you need to do if you want to trade futures on Binance is you need to sign up for a Binance account. Now, if you live in an area where you need a VPN to do this, I recommend that you set it up so that you are in the United Kingdom. This is what somebody who is not me does, okay? Because if you are trying to access from an area that does not allow you to trade Binance futures, you will not be able to access this interface. So make sure you're living in the United Kingdom if you are going to do this. If you do not live in the United Kingdom or an area that allows you to trade Binance futures, make sure that you don't do that, okay? Just the little disclaimer at the beginning of this video. Now, something else, guys. It's important that if we are going to trade futures, that we understand what futures are, okay? Futures are different than trading spot. If you are trading spot, then you're actually purchasing the coins, right? Let's say you're trading Litecoin USDT on spot. What you're doing is you're taking your tether and you're buying Litecoin. Let's say one Litecoin is $100. You have 100 tether, you buy 100 Litecoins. Now you own those Litecoins. If Litecoin goes up 100%, you can sell that, and instead of having $100, you now have $200. If you don't sell that Litecoin, you still have 100 Litecoin. If the price of Litecoin goes down 50%, you still have 100 Litecoin. But if you were to sell that back to Tether, you took the 50% loss. The thing about trading spot is you can hold the coins you buy for as long as you want. The price can go up and down, but you still have your Litecoin. Futures is something different. Futures is like a game where you are guessing if the price is going to go up or down. And what you're doing is you're taking the money that you do have in your account and you're putting it up as collateral, and the exchange is essentially going to loan you, you could say, coins, right? You're not actually going to own those coins. So if you're going long on Litecoin and you put $100 onto the trade and the price goes up 100%, still, you get your $200 back. You get your 100% profit. However, if the price goes down 100%, you're left with nothing. Your account gets liquidated because you didn't actually have those Litecoins in the first place. You were only putting your tether up as collateral. So in that way, it is more risky to trade futures than it is to trade spot. But this is very similar to, if you're familiar with trading on Bybit, like these trades I have open now on Bybit, these are margin trades. These are not spot trades. It's the same thing if you're trading on Bybit. This is Binance. Okay, so there are two different types of contracts that you can trade on Binance. We have the USDM futures contracts and the CoinM futures contracts. The difference is, this is very important, if you want to earn tether from longing or shorting, then you do the USDT perpetual contracts. This means if you're trading any pair, BTC USDT, RLC USDT, Doge USDT, Matic USDT, regardless of if you are longing and shorting, and we'll get into that more later, your profit is always going to be in tether. If you want to earn crypto, then you will trade the CoinM futures. And basically what this means is, the reason it's called USDTM and CoinM is because for USDTM, you're putting up tether as your margin, as your collateral. But if you're trading the CoinM futures, you're putting up the crypto coin as your collateral. So whatever you're putting up as your collateral is what you're going to earn in return. So if I want to earn more Bitcoin, then I should trade the CoinM futures BTC USD pair. If I want to earn more Ethereum, then I want to trade the ETH USD pair CoinM future contract. Okay, I hope that makes sense. But the bottom line is, depending on your goal, whether you want to grow your Tether account or grow your crypto account, that will determine what one of these contracts you trade. Okay, so the first thing you're going to have to do is open up a futures account. After you sign up for Binance, you're going to have to open a futures account. So what you're going to do when you're on like the home page of Binance is you're going to come over. Actually, this is the Binance futures. So really, let me just go back to Binance.com, not to the futures site, because you'll probably be right here. What you're going to do is you're going to click here where it says derivatives, and you're going to go to, let's just go to USDM futures. And before you have an account set up right here, it's going to have a little button that says open account. Okay, open account. And if you have an affiliate code, you would put that affiliate code there. There will be one in the description of this video. If you want to help out my channel, you can sign up to Binance Futures using my affiliate code. It would help me out if you want to do that. It's going to walk you through a little video and a quiz that they want you to take so that you understand what you're doing before you get into this. It doesn't matter actually if you fail the quiz, it'll actually tell you the right answer and you can just click the right answer and continue on anyway. I don't even know why they give you the quiz. But once you take the quiz, you will be looking at this screen, and now you actually need to fund your futures account. And the way you're going to do that is you're going to come to your wallet, and you're going to go to Fiat and Spot Wallet. And here you are actually going to put money, or cryptocurrency I should say, into your Fiat and Spot Wallet. Now, right now, I don't have anything in my Fiat and Spot Wallet because I actually set this up before I made the video because it's a long process, and I don't want to sit here and splice the video. But what you're going to do is you're going to click deposit, and from wherever you want, whether it be Coinbase, whether it be your Exodus wallet, whether it be a cold wallet, you're going to click this deposit crypto button and deposit cryptocurrency into your Fiat and Spot wallet. Okay, so for me, I deposited some Ethereum and I deposited some Tether into my Fiat and Spot wallet. Once it's in your Fiat and Spot wallet, you're going to come over here to the left and you're going to click futures right here. Okay, you're going to go ahead and click futures, and you are going to transfer the funds from your Fiat and Spot wallet into your futures wallet. The way you do that is there's two options up here. You have your USDSM futures contracts, and you have your CoinM futures contracts. The USDM futures contracts, this is where you're going to put your Tether so that you can do the USDTM contracts to earn Tether as your profit. The CoinM futures contracts is where you're going to deposit your crypto so that you can earn more crypto trading the pairs that are margined with the cryptocurrency. So the way you're going to get it into this futures wallet is you'll click transfer. You're going to transfer it from your spot wallet into your futures wallet. You're going to select the coin that you want to transfer from your spot wallet into your futures wallet. I did Ethereum. I already did it. Click 100%, click confirm, and boom, it will go into your your futures wallet. As you can see right here, I have 0.00981170 BTC worth of Ethereum, which is 0.12124738 Ethereum. Then you're going to do that for the USDTM futures as well. You're going to transfer Tether from your spot wallet into your USDTM futures wallet, and however much you want to do, click confirm, and now your wallets are funded and you are ready to trade futures. How exciting. So we're going to go to derivatives. We're going to go to USDM futures. We're going to start here. And what I want to do, guys, is I want to talk about the different options that we have over on our trading panel. The first thing we have is isolated versus cross leverage. Isolated versus cross leverage. Long story short, if you're using cross leverage, it puts your entire account at risk. Okay, cross margin puts your entire account at risk. If you're using isolated margin, it will only put the amount of margin that you put on the trade at risk. The advantage of cross margin is it gives you more playroom so that you won't get liquidated at such a high price. The disadvantage of cross margin is that it puts your whole entire trading account at risk. Isolated margin is what I prefer because it helps me practice good risk management, and it makes my liquidation price a price that I would probably want as my stop loss anyway. And guys, if you want to know more about risk management and how to actually utilize leverage and margin to your advantage without getting wrecked, check out jasoncaspertrading.com. This is the comprehensive trading course that will give you the knowledge and the skills that you need to become a confident, profitable trader. We go over everything you need to know if you're new to trading, technical analysis. I use the indicator Market Cipher. We show you how to use Market Cipher to find those awesome trade setups. The goal of this course is to show you how to create your own profitable trading strategy. And I actually show you 4 trading strategies that I use already and many people use with a lot of success. But then the ultimate goal is to teach you how to create your own strategy. And then we teach you risk management. We go over leverage, how to use leverage to your advantage so that you can actually make money with it instead of getting wrecked. Check out jasoncaspertrading.com, link in the description of this video. I think there's even a 7% discount down there. But anyway, after you select what type of margin you want to use, you're going to select your leverage. And again, just to quickly go over what leverage is, it basically allows you to place a trade with more money than you actually have. So if you have $100 in your trading account and you put 20x leverage on, that means you can trade $2,000. You could put $2,000 on the trade, right? Because it's 100 times 20 is 2,000. Now, the cool thing about that is you're able to trade. If you have $100, you're able to place a trade with $2,000. That's a lot more money than you actually have. So you're leveraging the amount of capital that you have to actually get more profit, 20 times more profit. If the price goes up 1%, you gain 20% on your initial capital, right? You would gain $20 on your $100. If the price went up if the price goes up 1%, and you have $100, 20x leverage, you actually gain 20%. The problem is if the price goes down 1%, you lose 20% of your account. If the price goes down 5%, you lose 100% of your account. But if the price goes up 5%, you just doubled your account. So again, this is something that you need to be experienced in. You can't just use leverage willy-nilly. You have to have a strategy, a risk management strategy, because leverage is a very powerful tool that you can use to leverage your capital in a smart, calculated risk way to make more money, but you have to make sure you know what you're doing. Okay, now that I said that, I can continue on. So let's talk about the different types of orders. We have the limit order and we have the market order. Now, there's an article, I will link it in the description of this video at academy.binance.com, understanding the different order types. Basically, guys, a market order is an instruction to the exchange to buy or sell immediately at the market's current price. A limit order is an instruction to wait until the price has hit a certain point before being executed. So the main difference here is your order will get filled immediately with a market order. With a limit order, your order will not get filled immediately, but the fee is lower. the fee is lower. So it's always better to do a limit order unless you really need to get in quick. So let's say I want to do a limit order. This is Bitcoin. I want to buy Bitcoin when the price gets up to $50,386.87, and I want to buy 0.005 Bitcoin, okay? I'm going to go ahead and click buy long, and this will place an order that will, well, I guess that already got filled. That already got filled. So that's a bad example. Let me close this. Let's do a different one. Let's say when the price of Bitcoin comes down to 50,186, I want to buy long, okay? What this does is if I go now to open orders, oh wait, I have to do it 0.005 Bitcoin, go ahead and buy long. Right here in open orders, down here, this is telling me that when the price of Bitcoin comes down to $50,186.87, an order will be executed, and you can see right here, okay, on the screen, that the order is actually, let's see here, this is the limit order right here. When this candlestick comes down to this dotted green line, it will trigger the order. Okay, let's see if we can actually get that to happen on video. I feel like this is the Discovery Channel where we're looking at candlesticks in their natural environment. Oh, there we go. There we go. It just hit my order. It got filled, and here we are, already up a massive 5 cents, 11 cents. I'm already up now 9, 10 cents. 12 cents, 18, oh my, 20 cents, oh, 15 cents. Okay, guys, as you can see, the price of Bitcoin is very volatile over here. So that's a limit order. A market order will get filled immediately, okay, immediately. So if you click market order, you don't get to choose what price it is when you get in. You just decide how much Bitcoin you want to buy, 0.005 Bitcoin, click buy long, and boom, we're in the order right now, as you can see. Already down about up 1 cent, up 0 cents right here. And yes, we're up 11 cents. I'm going to go ahead and close this order out right here. Okay, so now I want to talk about how to set up an open trade for take profits if you're in a long position, because a lot of people see the way I post my trades. Like last night, the awesome pump that we caught when we traded RLC USDT on Binance Futures, where I let's come over here, where we bought here $7.50, and I said take profit 1 is at $8.42. Take profit 2 is at $9.75. Take profit 3 is at $11.15. And the stop loss is down here at $6.88. We can actually set this up so that the take orders will be triggered, and we will take out partial profits at each one of these places and have our stop loss set here without having to watch the trade constantly. And here's how we are going to do that, okay? Let's say we do want to go ahead and trade the RLC USDT pair. Okay, what I am going to do is, let's say, yeah, okay, let's do this. Actually, let's trade a different pair. Let's trade Doge, right? Everyone's all about the Doge coin. Let's say I want to go long on Dogecoin, and I want to buy, let's say, 10% of my account I want to put on Doge, okay? Now, again, this trade, I'm doing it willy-nilly, okay? This is not the way you want to trade. You want to do technical analysis. You want to know why you're entering a trade. You want to have a plan. This is just for example's sake, okay? I'm going to go ahead and do my isolated margin. Click confirm. I'm going to go ahead and put my leverage down to 10x. Click confirm. I'm going to put 10% of my account onto this trade. I'm going to click buy long, and we can see that, oh no, guys, this is bad. This is really bad. How do they know this? Did my hang on, guys, hang on. What is going on here? Oh, I know what's going on. Okay. Whew. Whew. Okay. That was a different Binance account, guys. That was a different Binance account. We're gonna get into this more later here. We're gonna get into this more later. Let me just make sure. All right. So yes. Okay. I'm still in the UK over here. So I've got a little strange accent going on right here because I'm from the UK. All right. So I don't. I just went a little bit Aussie there for you. Let me try and get into my UK vibe. Hello there. All right, so I got a tattoo at the tattoo. No, wait, hang on. All right, so here I am from the UK. I'm trading on Binance futures, and so what you want to do to set up the trade is you want to select the coin pair that you want to trade. So right now I'm going to go to Doge USDT Perpetual, and I want to long Dogecoin right now. So I'm going to put my isolated right here, click confirm. I'm going to change my leverage down to 10x leverage, click confirm. And then what I want to do is I want to put, let's say, 10% of my account onto the Dogecoin, and I'll click buy long. And what this will do is this will enter into the order. As you can see right here, I've got an open trade already down 1 penny, okay, 31 cents. Now, what I want to do is I want to set take profit levels, okay? Different take profit levels. Let's say I want to set one take profit level right here. I want to set one take profit level right here, and one take profit level also right here, okay? I want to do one at 63 cents, one at 71 cents, and one at 79 cents. The way I'm going to do that is I'm going to basically just do a limit order that will get triggered when the price comes up to here. Now, it's very important that I click reduce only. Reduce only, okay? Reduce only will allow me to make sure that I'm not adding to my position, but I'm only taking away from it. Now, I have 738 Dogecoin, okay? 738 Dogecoin. Well, first of all, if let's say that you're looking at the price before we talk about setting take profit levels. Let's say right now I want to take out 50% of my position. Literally, all I do is I come and do a market order. I have 738 Doge. Let's say I want to take out 300 Doge. I just do 300, reduce only, sell short, and boom. Look, I took out 300 Dogecoin, and let's say I was in profit when I took that out. That's one way to take out partial profit. Another way is just to set limit orders, and I want to set one limit order at 63 cents. So let's say when we get up to 0.63 cents, I want to sell another 200 of my Dogecoin. I'm just going to do that. Okay, limit order, set my take profit price, set how much of my position I want to take out. Like I have 438 Dogecoin. I'm taking about 50% of my position out when we come up to the 63 cent level. Make sure to click reduce only and then click sell short. And what this will do is it will do a limit order up here that will trigger when the price comes up here, and I will exit out 50% of my account. And then let's say I want to exit out another 25% of my account when I get up to 71 cents. Well, I'm just going to come up here and go 0.71, and I want to take out, let's say, another 150 Doge, reduce only, and click sell short. Okay. And so now I'm going to be taking out 350 Dogecoin. That means I have about 120 left on the trade. And now what you can do is set a stop loss and a take profit. So if you want to set a stop loss, you come down here where it says TPSL for position. You're going to click this little pencil. And my stop loss, let's say I want my stop loss to be 50 cents. I'm going to go ahead and click confirm. What this will do is it will put a stop loss on the trade at 50 cents. At least it should, but I don't see that happening here. So let me see here. Let me just do 45 cents. I want to click confirm. What is going on here? Hang on, guys. You should be able to just put a stop loss here. Hang on, let me see what it said. Oh, Okay, yeah, we have to put it on cents. So 0.45 cents. Okay, and then click confirm. I was doing $45. And okay, this will put the stop loss onto your trade. And now what I do is I have my trade basically set up where I know how much I want to lose. It will close out my trade if I come down here to this stop loss. It will take partial profits if I come up to these partial profits. And even if both of these partial profits get hit, I still have a lot on the trade that I could just let moon. And let's say, I want to keep that last little bit on the trade until Doge gets to $1 and becomes the new official US currency. The way I'll do that is I'll just set my take profit at $1. And here we go. My entire trade now is set up, okay? There's other ways to take partial profit out too, like doing a stop limit order. You can do a stop market order, okay? A stop market order, which basically, when the price gets to a certain place, you can sell a certain amount, right? And make sure you do reduce only as well. Make sure you do reduce only. So I'm going to go ahead and close out this trade here. Going to go ahead and close out this trade. You can see when I close out that trade, everything got shut down. And let's talk about shorting now. Okay, let's talk about shorting because we did long. Let's do short. I'm going to go ahead and short Dogecoin now. I'm going to do a market order. I'll do another 10% on my 10%. And I'm going to go ahead and sell short. Now my order is open. You can see I'm already up 10 cents, raking in the dough, 19 cents, 9 cents, 25 cents, 19 cents, 31 cents, really raking in the dough. And then we just basically do the opposite of what we did, right? We would set our stop loss higher than our entry price. And to be honest with you guys, I don't usually short Binance futures. I usually long, but you can short as well. So our stop loss, let's say we entered right here at 56 cents. And just so you know, guys, this right here will tell you everything you need to know about your open order. It will tell you your liquidation price, which is 61 cents. I'm shorting, so if the price comes up to 61 cents, that means my initial margin on the trade right here, $41 will get liquidated, okay? Even though I put, $743 on Doge, my margin that's at risk here is only $41. Which is nice. That's what I like about isolated margin. So I could put a stop loss. Let's put our stop loss at I entered at 56 cents. So let's put our stop loss at 59 cents here, just to keep our risk nice and loose, nice and tight. And then we can set our take profits down below. So let's say I want to take one take profit at 53 cents. And then I want to do another take profit at 48 cents, and then another take profit at 43 cents. What I'm going to do is to take these profits out is I'm going to come over to stop market. I'm going to go to stop market. I'm going to click stop market. And then I'm going to say when the price gets to 0.53 cents, I want to sell. I have 743 Doge on the trade. Let's say I want to sell 300 Doge. Make sure to click reduce only. Make sure to click reduce only. Then I'm going to click buy long, okay? What this will do is it will put the, what's going on here? Okay, I messed this up. I want to sell when the price gets to 0.53 cents, and I want to sell 300 of my Doge. Reduce only, buy long. What it will do is you can see it will put the buy order here that will take out partial profit when we come down to this level. And then I would do the same thing at 48 cents, 0.48 cents. I want to sell, let's say, another 150 Doge, reduce only, very important, reduce only, because if you don't click reduce only, what could happen is instead of taking out of your open position, it could open a new position, and you don't want that. Click buy long, and we've got our other take profit right here. So right now we have our stop loss and our two take profits, and the trade can just kind of automatically run by itself, guys. And this is how you're going to do the USDT margined futures contracts. I'm going to go ahead and close this out here. Okay, and once you close that out, also cancel these orders as well. Cancel these orders as well. Now let's talk about the coin M contracts. Now this is where you're going to be earning cryptocurrency instead of fiat currency, instead of USDT. I'm going to be earning my Ethereum because I'm trading Ethereum, ETH. Let's go to the coin M, and we're doing the Ethereum USD perpetual coin margin. Okay, and you can see now that instead of dealing with Tether, I'm dealing with ETH. So if I want to long ETH, okay, I would basically either do my limit or my market order, and however many contracts you want, and they're basically going to be measured in how many contracts here is going to be measured in dollars, I guess you could say, right? Like how many contracts do you want? I want 240 contracts. I want 100 contracts. You're going to go ahead and click, buy long. It will open up the position. And basically, it's the same as it is with the USDT, where if I want to take partial profits, I just do a limit order, and I have 100 contracts. Let's say I want to take 25% out, do 25 contracts, reduce only, sell short, and wow, so that's really, really close to my entry. It actually just took them out, but you can, let's say when we get to $4,100, I want to take out another 25 contracts, sell short. It will place the limit order up here, as you can see. Hang on a second. As you can see right here, when the price comes up to this, it will take out 25%, another 25% of my trade. I can set my stop loss down here the same way I did for USDT, and the opposite is true if you're shorting. If I want to short Ethereum and I want to do 100 contracts and sell short with a market order, go ahead and click sell short. Then there's a few things we can do as well, where we could do the 25 contracts when we get down to, let's say, 39.74, and do only click buy long. And you can see now we have a limit order set for when the price comes down here to take partial profit out. We could do the same thing, another 25 contracts when we come down to 38. Make sure to click reduce only when you're doing this. Click buy long. It will do another order down here. We can do a final take profit right down here. Take profit, let's say when it comes down to $3,500. That's when we want our final take profit. And we could set a stop loss too. Let's say if it comes up to $4,200. Confirm. And so now this whole trade is set up for us, right? Where we have our take profits to take partial profit out. This will take all the profit out when we hit this final take profit down here. And this is our stop loss. And I'm going to go ahead and market close all these. Okay. And that's basically how you trade futures in Binance. Now, let's say you don't want to have to log into your Binance account every time you want to trade Binance because it's a hassle. Let's just say it's a hassle. All right, we're not excuse me, we're not going to talk about where you live in the world. We all know that we live in the United Kingdom. But sometimes you don't want to be logging into Binance all the time because something strange could happen. So what you want to do is you actually want to trade, let me see here, you want to trade on 3 commas, right? You can link your 3 commas to your Binance account, okay? You can link your 3 commas to your Binance account, and you can actually trade futures, Binance futures, through 3 commas using the smart trade. So how do you do this? You're going to first sign up to 3 commas, okay? And you are going to go to My Exchanges, and you're going to add an exchange. And what you're going to do is you're going to select if you want to do the USDT margin or the coin margin, okay? So if you want to do USDT margin, you're going to click this. Then you're going to go back to your Binance account and create an API key. This link right here will walk you through how to create an API key in Binance and how to set it up. And then what you can do is you can log into 3 commas and you can get the 3 commas app on your phone and trade Binance futures using the smart trade feature on 3 commas. It's actually really cool. And so what I like to do is I like to come down here and do, depending on, if I'm longing or shorting. You can do a smart long or a smart short. You can select your leverage type and everything that you can do on Binance. This is actually easier to do if you ask me. You can set your take profit levels here. You can split the targets, and you could basically say, I want to take out 25%, add take profits. You can add multiple take profits on here, and it's pretty cool. It's pretty cool, actually, the way you can do this with limit orders or market orders. You can set all this up before you even enter the trade. You can set a stop loss in here as well. You can set up a trailing stop loss in 3 commas. It's actually really cool. You can do it to long. You can do it to short as well. It's pretty cool, guys. You can do the conditional orders in here. And so this is a great way to trade on Binance without actually having to log into Binance every single time you want to trade futures. So just throwing it out there that sometimes, like, if you find yourself in a situation like this where you can't actually enter a trade because something like this happens, okay? You understand that, but you also understand that if you're trading through 3 commas, it's not going to give you that issue, okay? Let's just say that. Alright, guys, I hope you enjoyed this video. If you did, make sure to like the video, make sure to share the video, make sure to subscribe to the channel. Appreciate all of you. God bless, and I will see y'all in the next video.